The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here right now. We have the Dow Industrials up 30, Nasdaq's up 29, S&Ps are up 4.5, gold's down $7.30 at $12.19. You have silver down 10 cents, $16.15 an ounce. Platinum's off $15 at $9.04 an ounce. You get the copper flat, $2.49. Light sweet crude still can't catch a bid, down 38 cents, $46.05 a barrel. Notes and bonds. You get the notes down 7 ticks, 124.27. 30-year bond off 15 at 150.28. King dollar is up 424 ticks at 99.360. The euro is at 108 to the U.S. dollar. The yen is at 114 to the U.S. dollar. And bottom line, folks, okay, there's only one way this market can go, because the VIX is saying that, guess what? Everything is beautiful. And it's not only beautiful, it's going to be beautiful for the next few months.
Everything's cool, man. Nothing's going to happen. The market's just going steadily up and no risk. Yeah, we had, what, the lowest close in 24 years or something like that yesterday. Right. And we pull up on the TD Ameritrade platform. It intraday, sometime back in 2006, it looks like it jumped below 939, but even that day it closed at like 1156 or something.
Right.
So pretty remarkable.
It was the beginning of the end.
Yeah, right. Seriously.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade. And don't forget, folks, every trading day right here at TFNN, you want to understand options upside down, 12 to 1 Eastern Standard Time. Kevin Hinks, Scott Connor, they got an amazing show. Get it right on your cell phone, TFNN.com. And folks, if you haven't test drove the TD Ameritrade platform, great time to do it. Just come over to our website. You see the banner coming right across the top of TFNN. You hit the banner. They'll bring up the platform. They'll let you trade with paper money. You can trade right along with Kevin and Scott every trading day right here at noon.
Maybe he has something to say about the VIX. I don't know.
Oh, my God. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
Morning, Kevin.
Here's a shocker, Tommy. I do have something to say about the VIX.
Surprise, surprise. Here we go.
You know, all I can say is I've been through these markets before.
Yes.
Of extremely low implied volatility. And remember, the VIX is the implied volatility of the S&P 500.
Right.
So right now, you've got 8 of the last 9 days. You've had at or less than a 0.2% move in the market.
I know, man.
That combined with the fact we're at all-time highs. Now, that all equates to an extremely low VIX. That said, what will change that out of that range? What will make the VIX go up? Well, down will make VIX go up.
Right.
Make no mistake. Fear. They call VIX the fear factor. There is no fear right now.
Yeah.
Right?
Yeah, zero.
So, right. There's no fear. Tom, you said it exactly right. There is zero fear. Everyone thinks all is great. Well, we all know that doesn't always work out like that, right?
Putting it lightly.
Yeah, you know.
No, for sure.
That's just not, we make a joke and we use the cliche, buy umbrellas when the sun is shining.
Right.
Because, you're at all time. Everyone that's trading this market actively should be prepared for these low volatility environments. And, oh, by the way, we're going into summer, which is historically a low volatility environment. Now, what can get us out of that? An event.
Yes.
An event can do that. Some uncertainty.
And what's remarkable is an event could occur. That's what, there should be some type of, I feel like, premium priced in terms of that, even just that type of market-moving event. And, I understand a low VIX, but you're talking about closing at 24-year lows. This is like, getting into some crazy.
And you're at highs, and that's what normally does happen. The intriguing part is that we haven't moved at all, and you're sitting at those highs. So, I mean, we all know that, okay, it's going to either really go to the moon or, you're going to get a pullback. So
that's how it goes.
Yeah, it does, and it's like, wow, man. Yesterday when I was watching, of course, if you're trading, folks, you can't stand a sideways market with like a 1 point or 2 point VIX. I mean, S&P move. It's like, are you kidding me?
Yeah.
It's torture.
Yeah.
Absolutely.
All right.
But you've got to. These are times, just like in really busy markets, Tom, where you got to stay disciplined.
Yes.
And boredom trades, as we call them, never make money. So you've got to be fundamentally sound, doing the right trades, and applying the right strategy to the right environment. And this is a clear low volatility environment. So you've got to be ready for that.
Yeah. And folks, Kevin and Scott, they explain this so well, okay, because there are different trades for every different environment. Whether you're new or you've been trading for a while, I urge you to listen, because what happens is this. What I've found, Kevin and Tom, is that, technically and fundamentally you can teach people something, but you got to go through it. And when you go through it, it's much easier to comprehend it the next time. Do you know what I'm saying?
Sure. It's a several-step process, right?
Yeah.
You don't just dive in there and start doing it. You got to. There's a little bit of taking all the data and figuring it out, and then applying the strategy to where you are in the world.
Yes, because if we take like right at this second, and then if in fact whether you bust topside or bust downtown, it's going to be what is going to be the event. Because if we're going to bust topside, there's got to be an event also. Someone's got to make money hand over fist, because all these companies, folks, have already made money hand over fist. That's why they're hot.
They have to make more money than the market thinks. I was going to say, maybe the iPhone 8. That's already baked in. We'll see what happens. Yeah.
Right. We're in a range bound. Right. Range-bound trades are making money, therefore, what trades aren't?
Yes.
If we break out of a range, then range-bound trades won't make money.
That's right. Right here, folks, 12 o'clock. Kevin, have a great one, a safe one. We look forward to the show.
Always good to talk to you guys. Have a good day.
You too. Have a great one. Have a safe one. Stay right there, folks. Tommy and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling on us out here. And we're going to go over to the...
We're going to stay on that VIX, man, because it is fascinating. I was saying to you, I was like, I don't think people really understand when you're dealing with 24-year lows how low that premium is. But guess what? Then you said that's because the market doesn't think that maybe the S&P might move 2 points.
Exactly.
Right? I mean, 2 points is like 0.1%. We've been within 0.2%. That's only like 4 points. So you got to keep that in mind. It's range bound, definitely.
When you see this layup, though, not a layup, when you see that what we have going to put up on the screen,
of the premium, right?
Yeah, it's just
so we'll jump around first. I'm going to close these to not complicate.
Okay.
We're going to pull up the daily.
You're going to
spread.
tease them. I got it. Okay.
I'm not going to tease them. I'm going to slowly explain things to them so they understand it. I know that might be a little bit of a foreign concept.
Okay.
So 2,400. That's nice. Nice simple number, right? There isn't a 2,400. We're looking at the daily spreads, 415. Okay, so let's take a peek at the one with the ceiling. Let's say you're going to go short. 2410 is the ceiling. 2370 is the floor. So you're about 10 points below the ceiling. You're able to sell it at 23.99, 50 cents, 50 points, 0.5 points, half a point below the market. And with that, you're risking 110 to make 292. It's almost risking 1 to make 3, paying half a point in the S&P. Pretty remarkable if you ever got some action, right? That's a big if, but if it is still. Okay, so then we say, well, what about, man, if that's for the entire day, you're talking about, I mean, how much time is left? Yeah, you're talking about...
And there's still plenty of numbers coming out.
Almost 6 hours of expiration. Well, what if we wanted to trade one that traded at 11 a.m., right? What if we only give ourselves 40 minutes?
Yeah.
So here we are, again, approaching 2,400.
Right.
Here's your 2,400 ceiling. So you're paying all premium here. But here's what's remarkable is you're only paying about a point in the S&P in premium for a risk reward that's risking 13 to make 87. And, you know, your max profit is achieved at 23.90. Which is not outlandish, you know. It wasn't.
I wouldn't call it a couple weeks ago, but right now,
a couple weeks ago. That's a different world.
Exactly, right.
But in fairness, you know, as in we were just at 23.94 and 4 in the morning, so not outlandish. You know, we don't have to go back a couple weeks. We're talking about 23.90. We touched down there almost at midnight, actually, 2 days ago, right? Yeah. So on May 8th. So in the realm of possible. Now, what could you do if you wanted to trade both sides? Right? You were saying.
Yes.
Well, you could sell the one on the negative side, and then you'd pull up the positive one, which has the same 2,400 up to the positive of 2,410. You're buying the positive one, you're selling the negative, so you're getting into $24, and that means basically you need 2.4 points away from 2,400.
Either way.
To where, and then you start recouping profits beyond that point. And then, again, you know, these are only until 11 a.m.
Right.
But if you ever got to swing one way, you can try and close one out, trade the other side. So, you know, it all hinges on the market moving to recoup any profits on these. But it is remarkable when you start looking at, I mean, and that daily one kind of sums it up, I think, the best, where,
it does.
You know, you're not risking a lot of premium, whereas these ones, maybe you could, you know, if you make a directional trade and you're kind of out of the money. But yeah, you're looking at the market at about 2,400, and you're risking 1 to make 3. And for that, to put it in context, I mean, look at right now, $23.99, $2.50, you're paying a quarter, $23.99.
Exactly.
Right? I mean, that's remarkable in terms of...
So it's going down even lower, premium-wise.
Yeah.
Right now, we just pulled it up.
I mean, there's $23.99, $23.98.7, 0.8. Talking about, you know, that's a perfect right there if we could frame it. It was right straddling the market. So there was literally no premium. It was at 23.98.8, 23.99.2, and it's at 23.99. You have a 0.2 spread on each side for a 0.4 spread total, and you're paying 0.2 points below the market.
It's amazing.
With a risk reward that's just, you know, and you're only talking about 10 points. And basically what the market's saying here is you have 10 S&P points of risk, which is basically the, you know, way more risk than you're ever going to handle. So we're comfortable giving you 10 points to the upside and 10 points to the downside, right?
30.
And 30 to the upside, because you're probably only going to ever get 10 points to the upside because there's so little volatility that you have almost equal risk reward, so they're not putting in the premium. But guess what? Like Kevin says, that doesn't mean that the S&P is never going to move more than 10 points in a day ever again.
Right.
And we all know that, I'm sure.
And there's no doubt. Unreal. That's
pretty cool.
That is intense. That is really. It was. You know what's so intense about it too is that you're talking about an S&P at 2,400. It's like you know you're talking a very large number.
So 24 points would be 1%, and we know the market moves 1%. Well, it used to move 1%.
Yeah, quite a bit.
Exactly.
So let's go over. As you were just speaking there, which was pretty cool. You know, I was looking.
Just minimize that.
Okay, I was looking at the small caps. So watch this. Now the small caps are actually having a hard time holding price here. You know, this is So we had a high of 138. Yeah, actually bring up the futures because So it's going to be interesting. Is that does the small caps kind of start dragging these down? RTM7. I think that's it. Okay. Yeah, so that was just a good little move, right, when you were just talking about it, you know? So, this is something to keep your eye on, because it's going to be like, okay, what is the catalyst, or is this today going to be a total sideways day again, Those small caps haven't been able to, they broke out. On the 25th, they broke back inside on the 28th, and they're staying there. So let's go into the NDX 100. So the NDX 100, folks, okay, that is the number that just is like the little Superman out here. The lead is out here today. Whoops, 1 second. I'll do it this way. I like it this way. Yeah. It's easier. So what is that?
QVC.
Oh,
right?
QVC. QVC's up 9%. Man, oh man.
Can we check out their news?
Yeah.
I'm curious. I mean, maybe they're just doing well online, right? They would have to be, I would assume.
Yeah, it beats highest estimate.
So they came in at their estimate, but it looks like operating income, I'm guessing, 445 versus 410. Not a bad quarterly operating income.
Isn't that amazing? That's just people at home buying stuff on TV. Wow.
You know what? I would imagine that they are capitalizing off of just the online environment more as well, because they're a retailer, and so the TV is great, but I bet that they better be converting some of that to online businesses as well, as in there's no reason, to stay so focused.
No, I agree.
Yeah.
But I mean, it's like you hit that, they're selling jewelry, they're selling something 24 hours
we all
a day.
Flip past that channel if you have cable.
There's no doubt about it.
They are quite the salespeople for sure.
Are. Then you got Marriott. That's up 6.7%. American Airlines is up 3%, and Tesla's up 3%. Going the other way is Discovery Communications down 3%. X-Ray, which is a dentist.
Dent Supply.
Yeah, down 2%. And Red Bull, Monster Beverage down 1%. Inside the Dow Industrials, the leader, there she goes. The leader is Apple's putting 10 points into it. Goldman's putting 6. Boeing's putting 5. McDonald's 4. Taken away from it is IBM. IBM's having problems. That's down. That's taking 6 away. Chevron's taking 3. United Health's taking 3. You stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Dow right now is up 14. Nasdaq's up 25. S&Ps are up 3.5. And it hasn't moved. 3.5 to 4.5. So far.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien, we do appreciate you growling and prowling with us out here. You know what? We don't even have to tell you where the market is, because the S&P is either going to be up 3.5 points or 4.24 points, and that's it.
It could be up 2.75 points too.
This is actually it's pretty cool, folks, when you go through these. I mean, because even if you're on the TD Ameritrade platform and you're going through the premiums inside the the SPY, you can see that you can get a SPY call or put, your choice. And it's it seems like you're paying just about nothing.
Yeah.
And that's going out. I mean, we went out to June this morning. I went out to June, and the premium.
Yeah. So right now we're trading at about 240, right?
Yeah.
And even give or take. Expand these out.
There it is, right there. Yeah. You're in June.
I want more strike prices though.
Okay.
There we go. So if you're looking at a put, right?
Yeah.
Even at the money.
At the money.
You're talking about less than 3 points for June 16th.
I know.
Which is, and now that's going to translate into like 30 S&P points, right? But you're talking about barely over a percentage move for a full month, right? We're over that, June 16th. We're on May 9th. So you're talking about 5 full weeks.
Yeah. And that, baby, at the money, that moves very quickly, like right now.
For sure, right. And that's why I just jumped to here, the 240 even, 239. They're both 241, whatever you're, these are going to move pretty well.
It's amazing.
Yeah, I agree. It's a long time, 5 weeks.
Oh, my God.
Right?
Yeah. Let's go to our man Mike in Somerville. Hey, Mike, what's going on?
How's it going today, boys? The sun is shining here in Massachusetts.
I bet it is.
That's what we like to hear,
that
man.
Would make sense. It's about time you got some sun
It's
up
middle
there.
of May. You guys need some sunshine.
Yeah. You'll be able to get on the Cape and go swimming in July.
Listen, not to get on the weather, but this is probably only the 5th day of this spring, Tom. It's been unbelievable up here. Only probably the 5th day I've seen the sun.
Really?
Well, maybe you're saving it all for the summer, hopefully.
Wow.
Yeah, there you go. We go right from 50 to 80 hits from now. Tom, it's been like that.
That's what happens. No, there's no doubt.
We had it the other way. I feel like we've been 70 or 80 all winter, and we're coming into 90 now, and it was like, what happened? But
Yeah.
hey, that's where you take
Right.
the good with the bad.
Listen, I wanted to tell you guys a little fun fact about the QVC conversation. I have actually helped a couple of people that are down in their luck, and I've gotten those, the antennas. I don't know if it's just mass or, it's countrywide. The government did it. You can get the free digital TV.
Sure. Yes,
So
you can get an
I've
antenna
actually
for
helped the-
cable.
Yeah, instead of cable, you just get. Well, the last guy I helped, I bought him a really good antenna. He got 60 channels instead of 30 with the crappy antenna.
Really?
Yeah.
I've heard of these
But-
things, man.
Listen, Tom, but the funniest thing is, and back to your conversation, there's 3 of those pay-per-views on that digital TV.
They're smart, man. I'm sure they know they want to be in every house they can be. That's a customer, man. They'll make. They're not charging people probably to view their programming, right? As that comes down, think about that.
Yeah.
Right? They're probably just like get it out whenever we can. They want to be.
Yeah,
in every
that's like getting the razor in the hand. Now study the blades. That's pretty. I got to look into that, man. I heard that's a great deal too. I know.
Well, it's a great deal. It's free.
Tommy, if you get the one that goes on your roof, which is a pain in the butt, and then you run the, like a satellite dish.
Yeah.
Instead of saying DirecTV, you get your own, and then you run it throughout your house, and you basically get 60 channels or whatever it is, 30 or 40 channels for free.
That's pretty cool.
That is cool, man.
That ties in well to Disney coming out with their earnings today. In terms of charging for ESPN.
Yeah,
But
because
anyway.
that ESPN deal, man, that's been killing them.
Yeah, they come out after the market today. We'll see what happens. They
Yeah.
laid off those 100 employees. We'll see how that shakes out, what they talk about.
So, Tom, I'm getting killed. I got the weekly silver. I'm getting, I don't know if I got any hope for this one, buddy. The 1650 on Nadex.
Yeah, that's why you keep that to find risk, man.
This is intense.
Quite a move we've
There's
gotten.
no doubt this is intense, man. I mean, you're at 16-14, and it hasn't been able. I mean, this hasn't caught a bid. I know Andy's been keeping track of how many days, but April 17th, one-way
We're a
trade.
far cry from there. It's pretty incredible.
Yeah.
I figured yesterday, I said, I'll do the weekly. I'm like, it's got to bounce at some point, but I guess I'm wrong.
Well, it's kind of like Tommy and I just talking about the VIX. It's like, okay, we know it's not going to stay there forever, and it's not. And the same with silver. The bottom line is that with commodities, I mean, that's a useful product, okay? It's not like it's going to, go to zero.
Sure.
But guess what? What does happen
Doesn't
is
mean
that
it's going to bounce, right?
No,
Yeah.
exactly. It doesn't mean that, okay, where are the buyers,
Yeah. It's kind of the same, tying it back to the VIX, where you're like, no matter what happens, though, this market doesn't want to go down.
Right.
So keep that in mind as it's just both sides of the coin for sure.
What I do like, Mike, out here right now, though, is just for all you guys and women that are, into that metal, the dollar hasn't been able to hold the top of the gap right now. And, it looks to me like it's going to try to get back inside like the 99,300. We're at 99,340 right now. And if we can get that going, that's going to make a big difference because this was a big lunge, man. I mean, the dollar saved itself yesterday. You got to 99,495. 99,560 was the number. But if this can close under 99,340 today, that's going to be a failure again. So that is that correlation is direct inside the metals market. That's what it comes down to. And the yen is definitely, the yen right now is at the 114.17. It looks like, I mean, that 115.51 is probably game. So we'll see whether that's the end of the counter trend bounce in the yen. But
And I was just going to pull it over, I bet. Yep, that's April 17th. Just pretty remarkable. Same.
Isn't it?
Yeah.
I know. The correlation is
For sure.
direct.
Well, you can see how conservative I am. I actually, believe it or not, guys, when I talk to you, I really only do one contract, but
That's great.
Yeah, it's perfect.
No, but I only do the weeklies, and I'm in it big. I have 4 actual contracts at different points in time.
See how the week shakes out. It's only Tuesday morning.
No, listen.
Those metals have had some volatility, so maybe they might get some to the upside.
They
especially
have.
silver, yeah.
They have. There's no doubt about
Looking
it.
at that yen, that would have to move as well.
Tommy, you know how I do it. I do the weekly. I do the minimal loss. Like it says you'll lose $38. I don't go up. I never go over the 50. So it's just like I said. It's something fun. It's a good thing. I like to go out the week. You know what I mean? It makes it interesting.
No, it does.
We're with you, man. We make similar trades for sure.
No, there's no doubt.
And that's your stop. You're not worried about, you're risking whether it's $30 to make 70. So guess what? If you end up ever batting 500 and you're winning 1 out of 2, you'd be massively profitable.
And what ends up happening is that you can learn so much when it's really on the line anyway. That's the other side of
the markets,
it.
for sure.
There's a difference in the context. We want you to trade with paper money, folks, to really understand the process first. But when you get into it, just do one, because the correlation inside the head is still pretty cool.
Your brain can't help get focused when you got money on the line, man.
Hey, Tom, I just want to tell you one thing. Whether I have millions of dollars, $100 is still a lot of money to me, buddy. You know what I'm saying?
Yeah,
right?
exactly. And that's a great way to live, man.
All right, bye.
Have a great one.
Thanks,
Have a safe one. Stay right there, folks. Tommy and I are coming right back. Dow's up 25, 14. Nasdaq's up 25. S&Ps are up 350. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 3, Nasdaq's up 21, S&P's only up 250. What happened?
I was just going to be like up 3. What happened,
we just lost the point.
We did.
And folks, if you come over to our website at TFNN, you're going to see our man, Mr. Steve Rhodes. He is going to be doing the 5 essential patents for timing the market Wednesday, May 17th.
Week from tomorrow. Time flies, man, and then we got the summer upon us. Pretty crazy. But yeah, so he'll be doing a workshop for Mastering Probability subscribers a week from tomorrow, May 17th. So normally this comes with a money-back guarantee, but as a special, we've opened it up for a complete free trial. So new people can get in there, pay nothing. You get a month of Steve's newsletter, Mastering Probability, daily newsletter coming out every day. And I think he just I checked my email during the break. He's sending out updates as we speak to his subscribers. And he'll be doing a workshop a week from tomorrow that's included. Also, when you sign up, you gain access immediately to his money management webinar, which is added to your page. And then he'll be talking about the price RSI patterns, the oscillator unchanged link, Japanese candlesticks, how to master the D point of the A to B equals C to D pattern, and the VIX and its timing signals. And he put this together like a week or 2 ago. So the VIX, it's been at historic lows. But as in, that wasn't added yesterday because of that low. And of course, that's something timely to talk about. But yeah, 30-day free trial. People can get in there, check it out, and don't wait until next Wednesday. Get in there right now. That way, you're in there for over a week. You get his newsletter. You get access to the webinar. That'll be a week from tomorrow. Pretty cool.
Man, times are just a-flying. There's no two ways about that. And
it's going to be 2018 before we know it.
2018.
You know what's remarkable, too, man? We are just going to run right back into politics like we're already not back in it.
I know.
But you have the midterm elections in 2018, which is just mind-blowing that we're going to be coming up on it, and we're going to be there again. And then guess what? We get past that, and then they're going to be already talking about the 2000 presidential election.
Right.
Time is just crazy.
If I was ever a politician, I'd like to run for a senator. I wouldn't want to run for the House. They got to run every 2 years. That's like insane.
They do.
That's like,
Unfortunately, a lot of members in the House don't even have to run, though, which is the problem, as in they're just so instilled in their districts. On both sides, but so that's kind of the downfall, is that they do have to run, but there's such staunch holds on each district that they actually don't have many competitive runnings. But hey, it's good to have people have to renew their government lease every 2 years if they're going to be representing us on a local basis.
Yeah, no, that's a fact.
You can do a lot in 6 years without needing to worry about the people you represent.
There's no doubt about that. Let's go over and take a look at even the bond market. I mean, look at the 10-year, still just laying there at down 8. Now, if we take a look at this 10-year, so you get 591,000 contracts. And the 10-year, folks, that is really light volume. The 10-year likes doing a couple million contracts. In fact, it's going into 1.4 million from the 11th of April. That low there is 124.28. We're at 124.26, as well as there was an up spike that gave it up on April 7th. That's where the 2 million is. And then when we broke topside, it's 1.5.
Yeah.
But guess what? If you don't catch the bid, it's like, okay, it's trying to break it back inside this range.
It's been trickling down.
Yeah. And if we take a look at the actual rate structure, you're at 2.4 right now.
Not bad.
No, it's still very inexpensive, but yet much higher than rates across the world.
It's remarkable. Is it, we're at 1.8, we're at 2.4, 0.6 of a rise, even in the 6, and we're as low as 1.3 going back a year. So
I know.
We've had some appreciation. That's pretty low.
It has.
Yeah.
There's no doubt about that.
Yeah.
The 30-year rates, now mortgage rates, so the 30-year mortgage, folks, trades off of the 10-year.
Yes.
The difference is, it seems that, like right now, as of 2 days ago, let's say, what day is today? As of Friday, you could get a 30-year, I was getting them quoted at 3.85.
Okay.
Okay, that's all in, too. Okay? Now, that's still really inexpensive for where we are, I think, in the 10-year. Do you know what I'm saying?
Sure.
Because I don't remember, they probably, when it was probably 1.3, it probably went down to 3.45 or something, which is pretty amazing.
I'd say at least.
Yeah.
At least. It was probably at 3.25, really.
Yeah, 3.25.
At least.
Imagine getting a 30-year for 3.25.
That's what I mean, yeah. Yeah, right.
That's cheap money.
Everything's perspective, right?
Oh,
As
it
in
is.
3 1/4.
It is.
You're paying somebody 3 1/4 for that money, and it's a decent rate right now if you're going to pay your bills and they're going to get all those payments.
No,
that's the other.
That's a
The
huge
person that
point.
lends you that money
no,
for
that's,
that, as long as they're going to get paid back, which is the if situation there,
Yeah.
of course, because you're not buying a guaranteed government bond.
Right.
That as long as you're getting paid back 3 1/4, a lot of people like 3 1/4 right now if it's guaranteed money, which is not, but that's where it's.
There's no doubt. Listen, if we go back, imagine you go back like 5 years, or actually you go back a little bit further than that, and you're getting like 4.5%, 5%.
Yeah.
That's like.
Well, what
that's
happened was
huge.
I had bonds, right, when I was born in 1988,
Yeah.
and I had all these bonds that I cashed in a few years ago,
Right.
Buying a house, and man, they had appreciated gangbusters because at that time the
Right.
rates were through the roof, and so the initial cost for the bond, maybe you have a $1,000 bond,
Yeah.
and you're paying like $100, and it's going to mature in 20, 30 years.
Yep.
That's why I'm 37 now, so
Right.
it's perfect. Where got them in 1980,
Yep.
they matured 30 years in 2010.
Yep.
I actually cashed them in later than that, so you still are incurring interest, but it was remarkable to see the amount of money that was put up in whether it was like 1982, 1983 for
Right.
my birthday when I was
Right.
young, and then the vast amount they grew to. But that was because of the interest rates that they were able to give, where you could buy a $1,000 bond for pennies on the dollar,
Right.
because you were going to get such growth.
Well, here I'll show you. This is crazy actually. Here, U.S. This is so cool because this is what it is. If we're going to I'm going to pull up the actual bond right now, and I'm going to go back 30 years. So what you're going to see, I got to go back more than 30 years. Oh my God! Hey, let me go back 40 years, and you're going to see how this shakes out.
Right.
So here's 1980.
Yeah.
So in July,
I was a great trader
you were
from my birth.
Right at your birth.
Buying bonds at all-time high yields.
Here it is. Okay, so
Buying bonds.
So December of 1980, right? You get a $1,000 bond for $630.
Is that what it is? Okay.
Now it gets intense. Watch what happens though. That bond was paying 12 to 14%.
Right.
Interest.
Sure.
That's the thing. That when you're looking at this chart, folks, that means that what had happened is that rates had gone up so dramatically that the reason that bonds are cheaper than the $100 is that people thought, hey, rates are going to keep going up,
Sure.
and so they had to discount them.
Sure.
But that means that first off, you get the principal back, and then you get the interest the whole time. Now, the wild thing here is to understand now that when we're looking at a 30-year bond at 150, you're paying $1,500 for a $1,000 bond.
Sure.
For the right to get that interest.
Sure, and that's like the trade, how it's trading, right? But I think if you went and you bought the bond, right?
That's right.
That's a different. It was even just to illustrate. It was so much cheaper because you're paying what's the present day value.
That's correct.
So they just so if I had a relative that bought me a $1,000 bond when I was 1 year old,
Right.
they weren't paying $600. They were paying like $100 or $200 because over 30 years, the present day value
Yep.
of $1,000 in 2010
Yep.
at getting like 14%
Right.
is such a tiny number. So it was remarkable to see the people that invested in that. I mean, it was great, man. I appreciated it.
Gotta love it.
It was great, totally.
You stay right there, folks. Tommy and I are coming right back. Dow Industrial's up 11, Nasdaq's up 21, S&P's are up 2.5. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of tfnn.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow right now is up 9, Nasdaq's up 23, S&Ps are up 250. And if we do go over to that Nadex platform and take a look at it was the 11 o'clock that we were looking at, right?
We were looking at the dailies, but the 11 a.m.s we were talking about. So if people recall, it was right at 2,400 when we were having that conversation.
Right.
And so we'll jump to the 11 a.m.s. And we were choosing the 2,400 going short and the 2,400 going long, right? Now, the 2,400 going long obviously has kind of no market because we're underneath it with 5 minutes to go. But the one that was short, if you remember, we could have gotten both of these for a combined $25, which is 2.5 points in the S&P.
Yeah.
And right now we're at about 2.25 points. So we're close. You know, it'd almost be break even. But
it's cool to know, though.
But it feels like the market hasn't even moved, right? And that's how little premium you're paying up until 11 o'clock. And we got 5 minutes left, and you're a quarter point. Now, right now, you would get $22.50 back. Now, there's your 25 that you'd get back, and it's creeping below it as we approach. You know, you have commissions in there with $1 on each side. So we even call it commissions. You're looking at 3 commissions potentially, right? 2 for the 2 on the way in, 1 on the way out. So you're looking at maybe $28. But you know,
that's a decent trade setup.
We're at 27.50 right now. You get back, and it's creeping down. You get 4 minutes. So, you know, that's similar to kind of what Mike was talking about, where you know, an easy trade, limited risk. You know, you're not going to go bankrupt. Make a couple contracts maybe on each one. And you know, guess what? At some point, some hour during the day, today, tomorrow, next month,
no doubt,
2018. We'll get a 10-point move in the S&P within an hour.
Right.
We'll see.
No, totally. And that's where the consistency comes out.
Yeah.
You know, you stay right there, folks. We got our man, Mr. Basil Chapman, coming up next. And, of course, then you want to understand options upside down. Kevin Hink, Scott Connor, and I'm sure they're going to be talking about, you know, what are those premiums? And
let's see where the VIX is as we finish it out.
What types of setups do you do with a low VIX environment? You know, because the bottom line is that all these different environments, you have different setups.
Yeah, 989 right now. We're as low as 956 today. 939 is that all-time, basically historic low going back 20-plus years or something like that.
Yeah.
I mean, when we put it for the
and just so you know, that as you said a little bit earlier, when we did hit that, folks, okay, that was the beginning. It still took another, I mean, I believe it went from 9-something to up to 11. That
was that month, right? We're looking at a monthly right now. It's not loading up.
That had been the low. I mean, then we ended up with a VIX of 90 something.
Yeah, and even, to be fair, that's actually almost a year and a half later that it starts rocking, because it's the September of 2007 is really when everything goes haywire. But guess what? I mean, we're looking at July of that year. We were as high as 23, which seems outlandish right now.
Well, because what did happen
in
once
August, we got above almost 39.
Oh yeah, that was a big
right. No,
there was a good couple years of heavy volatility that and then we went from
these years right there.
Yeah, seriously, we went from markets moving up $150 a day to 175 then, and
I mean, try and imagine, we couldn't even comprehend right now. I think you're talking about in September of 2007, we begin at 20. The next month we begin at 40.
Right.
We close that month out at 60. The next month we're looking at now November. We open at 60, close at almost 60.
And get to 89.
Yeah, I mean, just remarkable, seriously.
Pretty wild, man.
Pretty wild. And there's the S&P, not bad. Quite a run.
239.93. It's just hanging right there at that 240 level.
That's a channel, man.
That's a Bud Rolf's channel in an incredible way. So as you're going through the day out here, folks, keep your eye on that 10-year. Right now it's down 7 ticks. It has light volume. So if you get a rejection in that 10-year, that's when you start seeing the market turn. Keep your eye on that dollar. The dollar hasn't been able to handle that up 500 ticks just yet. You stay right there, folks. Basil's coming right up. We do appreciate you growling and prowling with us. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of tfnn.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting tfnn.com.
This is TFNN.